What's going on, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you guys are at it, go ahead and smash that like button. I really would appreciate that. Now, guys, in today's video, we're going to be talking about wealth. We're going to more specifically be discussing net worth. And I discovered what net worth was when I was in my mid-20s, maybe just before my mid-20s. And I actually overheard the term net worth while being in the company of some people who I believed were fairly high net worth individuals. Or at the time, I thought they had money. I thought that they were rich. And so it was a term that I never heard before. So I decided to look it up. And after I looked up net worth, understanding what net worth meant forever changed my life. And it forever changed how I decided to handle money going forward. So understanding net worth here in the United States, it's more about just doing the math. And if you don't know how to do the math, I can show you how to do it. It's a really simple equation. Basically, you take what you own, whatever you have that's an asset, and you subtract your liabilities from it, and that is your net worth. So just for quick and easy examples, let's just say you have a house, right? And your house is the only asset that you have. So let's just pretend that your house is worth $500,000. Let's also pretend that your house mortgage or the remaining balance on your mortgage is $400,000. In that scenario, you would have a net worth of $100,000. So you would take the value of your asset, which is in this case, the house is 500 grand. You owe 400,000 on it. So if you were to sell that asset and liquidate that into cash, you would have $100,000. And that is what net worth is. That is a simple way of calculating net worth. Now, if you have other assets, mutual funds, index funds, cash, gold, all cryptocurrencies, you name it, then obviously those additional assets would be added into the equation. But at least now you understand how to calculate your net worth. So the thing is with net worth, you can grow your net worth. And as we head into a changing economic climate, it is going to be more and more important that you understand net worth, not only so that you can survive, but also so that you can thrive and grow financially during the next several months and into the next several years. So the Federal Reserve, they have been collecting data on net worth for all of its, components since like 1989 through the Survey of Consumer Finance, also known as the SCF. And basically, they understand how much everybody is worth here in the United States. And if I'm not mistaken, or I would venture to guess that the Federal Reserve probably even knows the net worth of people outside of the United States, but we're going to keep it here local. And the median net worth here in the United States is $121,700. So the average net worth is $748,800. Now you might be wondering to yourself, well, what's the difference between the median net worth and the average net worth, right? I think that the simplest way to explain that would be when you have averages, it is much easier to skew the numbers in whatever direction you want to. So for example, let's just say you got a bunch of people who are making like $50,000 a year. I don't know. Let's say you got 500 people who make $50,000 per year, right? No, let me rephrase. Let's say you have 499 people who make $50,000 a year. And then you have, I don't know, Elon Musk or Jeff Bezos added as the 500th person in that list, right? So you got 499 people who make $50,000 a year. Now, if you just looked at the average of those people, the average is $50,000 a year on income, right? But the moment you add Jeff Bezos or Elon Musk into the mix with their, I don't know, $50 billion annual income, I don't know if he made $50 billion last year. He probably, anyway, let's just say you add Jeff Bezos in there. He made $50 billion last year. It's going to bring the average up dramatically. I mean, I don't have a calculator in front of me right now, but if you added Jeff Bezos in there with those other 499 people who were making $50,000 a year, all of a sudden the average looks like, that they're all making like $50 million a year. All because this one person makes so much more than the average or than the majority. And so that's how averages get skewed up. Now, obviously the averages could be skewed down similarly. Now, if we talk about the median net worth is $121,700. Now, that is a far cry away from the average net worth of $748,000, right? Now, the median is much harder to skew, and it's probably a more accurate number to go off of. So let's use the median. So the median net worth here in the United States is $121,700. And you get that figure. Let's just take the same example. You got 499 people. Basically, let's just say you have 500 people, 250 people have less than the median, and 250 people have more than the median, right? So in this case, the median net worth here in the United States is $121,700. So that means that out of 500 people, 250 people have less than $121,700, and 250 people have more than $121,700. So this gives you a much more accurate picture in terms of how wealth distribution within a given market segment is being distributed. And so the key is here is to understand how net worth is calculated and what net worth really looks like here in America. Now, how many millionaires are there in the United States? Well, according to the Global Wealth Report that was conducted by Credit Suisse, as of the end of 2020, there were 21 million US millionaires. And this figure is growing. It is estimated that the number of millionaires in the United States by 2025 is expected to reach 28 million millionaires in the United States. So as we hear more and more information about, the middle class is going away, the middle class is getting squeezed out, I don't want to discount that and say that it's not true, because I do believe that the middle class is going away. But I want to provide a little bit of uplifting information that is also truthful information, because what a lot of people don't realize is that as the middle class goes away, the middle class can go away as a result of being squeezed below the middle class. But at the same time, the middle class could be shrinking because people are climbing upward out of the middle class. And this is exactly what the media is not telling you guys. So I just wanted to share this little bit of information with you. And hopefully it is a stepping stone toward you building your financial education, increasing your financial IQ. And so that way you can increase the net worth of you, your family, and ideally of your offspring, your kids. And so, now we could talk about, how many billionaires there are in the United States, but I want to just kind of focus on the millionaires, right? Now, I read a study that indicated that people who make over $100,000, 50% of people who live paycheck to paycheck, out of people who make $100,000 a year, 50% of those people are living paycheck to paycheck. Now, I don't want to speak down on anyone who's making 100 grand a year and not saving money, not, in a situation where they're not living paycheck to paycheck. But in all honesty, $100,000 a year is above the average income. So you might wonder, well, if you make $100,000 a year, how could you possibly live paycheck to paycheck? Well, a number of different circumstances could affect that. But in many cases, and obviously it depends on where in the United States you live, maybe the cost of living where you are is just very high, and $100,000 just doesn't go that far. But, it just really depends. If you're making 100 grand in New York, if you're making 100 grand in California, then it's a totally different level of overhead in terms of your cost of housing, your rent payment, your mortgage payments, and cost of gas, transportation in those states compared to if you lived in the state of Georgia, Mississippi, Texas, South Carolina, where the cost of living on average is less than the cost of living in, some of the higher parts of the United States, such as California and New York. So there are those factors that affect, how much your 100 grand a year income or salary can go. But one thing that you got to do, no matter what your situation is, you got to figure out how to save, how to save more, no matter how much you're earning. And no matter how much you're earning, don't be afraid to figure out how to make more money. And how to make more money, how to increase your net worth, is largely to do with your income. I was taught a long time ago that my income is my greatest wealth building tool, and that applies to everyone, right? And so I never want to have anything that's like creating a huge draw on my income. And so, I don't really like debt. And so the only kind of debt that I'm going to accept is the type of debt that I can see a return on. Now, in terms of my own personal residence, I am fine with having a mortgage payment for the simple fact that I don't want to tie up so much capital in a very illiquid asset that I could instead stretch out with a very low fixed rate mortgage. We got less than 3% interest on our house. And, we can stretch this thing out over a long period of time. And the asset, generally speaking, I don't know if there's a 10-year period in time where real estate has not appreciated every single time. So with the exception of a house, I'm okay with that. But generally speaking, and there's no absolutes here. There's always exceptions to the rule. I generally want to make sure that if I'm taking out debt, that debt is paying for itself. Meaning, if I'm taking out debt, I want to make sure that that debt is making me money, right? Case in point, let's say you got a rental property and that rental property is costing you, $2,000 a month for debt service, but you're able to make $3,000, $3,500 a month in rental income from that property. Well, then to me, it makes total sense for me to take out a mortgage, for an investment property that's making me $1,000 to $1,500 a month. I'm okay with that. That cash flow is going to generate anywhere from $12,000 to probably $18,000 a year by me taking on a mortgage payment for a rental property with a cash flow of $1,000 to $1,500 a month. So that's a no-brainer. So, the thing is, I don't want to waste my money on consumer debt, right? Now, obviously we all like nice things, but I don't want to ever be in a situation where my toys and, my lifestyle creates a drag and brings my net worth down. And that is where a lot of people find themselves. And so that's the trap that you have to avoid. So anyway, guys, I just wanted to share this information with you. How to build net worth in America. What are the averages, what's the average net worth in America, and what you can do to increase your net worth here in America as well. So I really hope that you guys got value out of this video. If you did, do your boy a favor, drop me a like for the video. Also subscribe to the channel and let me know if there's any topics that you want me to expand more on. I love talking about building wealth because that is how you get out of the rat race. If you guys want to learn more, definitely hit me up in the comments down below. Hope you enjoyed. See you on the next one.